So yeah, as I was saying that for oil, we're expecting a bit of resistance as the price was coming to this level. So when we saw this price action, we were not surprised. We've been bullish on oil. We have Sasol in our portfolio. In the US, we have companies that are investing in oil and gas. We also have please mute yourself on that side. So we also have companies that if you get in, please mute yourself. Let me see if you can't. Right. Okay. All right, I think it's going to work now. Let me check. Okay, I'm not muted. Yeah, so I was saying that we're already bullish on oil. We had a position, we were expecting a resistance level there based on the previous price action. So we were not surprised that at the beginning of the conflict, the price it pushed up to reach this level. And we are still, well, we're expecting the price of Brent crude to push all the way to about $120 per barrel. We tweeted this when the price of oil break above this level. As South Africans, we know that fuel is expensive. So if that scenario plays out, it's bad news for us, right? Then for those that just joined, we're talking about gold to say that when the conflict began there, then the price of gold, it shot up, as you can see, this candle there. It quickly rose up because we had positions in some gold stocks. We were able to make a bit of money there, but some of the companies that we had, they quickly gave back the gains there. We managed to get our profit from Sibanye Goldfield at Anglo Gold Ashanti. There we gave back those profits because we didn't exit quick enough. Right. So the purpose of today's video is to try and find opportunities elsewhere. But what is notable is that we saw that in the past, the US market has been having challenges. As you can see that when it reached this level, I'm trying to admit people and draw at the same time. So the price of S&P 500 it failed to trade above 4,800 points there. Then it started to consolidate, come down then, right? So this was the previous demand level where the price retraced before pushing further up there. So we're also expecting a bit of support level just around this level. We saw that the price attempted to recover just around this price here. Okay, let me see. How can I add you as a co-host? Sive is offering that he can co-host and then invite people. I'm just trying to find the option to add you as a co-host, Sive. Let's see. Okay, make a host. Yes, so please, Sive, admit everyone that is joining. Everyone is welcome. Thank you. So yeah, as the price came back to this level, that was just around 4,280 points. It then attempted to rally, but again, as you can see, there was still a bit of weakness in the S&P 500. Then it came back to retest this level again. So on the day of conflict, then we're here. This is last week candle. We saw that the price pushed up. So when you look at this candle, this is what it tells us. Assume that the candle is green. For those that don't know candle patterns, so because it's a green candle, it means that the opening price is lower, the closing price is high. But during the day before or during the week before the market closes, there is some action. So the sellers, they tried to pull the price down, but the buyers managed to push the price up there. Then the price closed up there. So whenever we see something like this, well, depending on what you call it, I call it a pin bar, but the other opposite is that the wick is on the other hand. So if the price moves up and then you see a candle like this, then you can expect the next price action to go down. So the pin bar, I'm not sure whether this is the pin bar or this is the pin bar. But the point is that this is a bullish continuation. It's just arresting this decline there. We saw that the market closed green. Ideally, we would have wanted to see this candle to be larger than the last week's candle. Then we will have confidence that the share price can push to go back to this previous supply level, which was 4,800. So we're not trading S&P 500 on our side, just as we're not trading NASDAQ. But it's the same thing that we see with NASDAQ. NASDAQ was much weaker than S&P 500. As you can see here, this was the previous breakout level. So we expected the price to find support at this level. And again, we also see this bullish reversal candle. What we expect for those that trade futures, we can expect that the share price can go up there. What is tricky now is that the wick of this candle, like that thing, this is the wick, and then this is the body of the candle. So the wick is a bit longer there. If we want to buy at the current share price, we need to have our stop loss just below this wick there. So if you compare the risk that you'll be taking and the potential reward, if the ratio there is less than 1:2, then it's not worth it. We do not encourage people to take trades low probability setups, because every time whenever you take a trade, it's important that the risk that you are taking is worth the potential reward. But this is not a financial advice. It's up to you guys what to do with your money. So since we are not trading this S&P 500 and the Nikkei, but if you want to trade NASDAQ using an ETF, there's an ETF that is called QQQ. It's coming from Invesco. I don't like trading not S&P 500. I don't like trading Signia ETFs, the ETFs that track the US market, because that introduces a lot of fees. But based on this, you see the price of the ETF is about $345 compared to 14,000 points of the NASDAQ. So from this ETF, depending which broker you're using, I have an account with eToro. I can easily buy this ETF, then have my stop there, and then my take profit going up there. So my trade idea is that the share price is going to push back to about $400 there, right? Some people, they're always asking, how can they set stop loss? Again, it depends on your broker. But from the chart, if you go to this option, because we are going for long idea, you see there's a long position and the short position. So this helps to put in the risk to reward, because it shows you where is your target and where is your potential stop loss. Then you can quickly see if where you are setting your stop loss and your take profit, right? So let's say that our stop loss is just about $314 and our target is somewhere around 400. Then from this, we can already see that the risk to reward is about 1.73. It's just a bit under 1:2, but this is in the weekly chart. If you are desperate, you can go to a lower time frame so that you find a stop loss there. But I mean, as you can see, this is the recent candle, the smaller one. The best way to put a stop loss is that whenever you get an opportunity, let's say you're using this candle, then you look at the previous day candle, and then you set stop loss below the previous day candle, not the recent candle. So again, your stop loss is still going to be somewhere there. It's still going to be a bit bigger, but that's if you are desperate to take a trade. The market does not go anywhere. It's always going to be there. So we shouldn't force trade. In fact, there would be better set up elsewhere rather than this. But for those people that trade the JSE a lot, I know I've been talking a lot about the US market. That's because that is where I'm trading. So I'm going to share a trade with you that I took on Easy Equities. So this is Thungela shares. So my belief for those that have recently started following me, I mean, I believe you can buy high as long as you can sell higher, because nobody knows how high the share price can go, right? So no matter how you think that the share price is expensive, it can get more expensive. So always take those opportunities. Then for Thungela, obviously the best place to buy was when the share price broke above this level. But we're just waiting for the share price to close above this level. Unfortunately, it only closed above this level from a distance way above from this breakout level. So I couldn't take a trade at that time, because if I took a trade there, my stop loss was either going to be here at the low of this candle or just below this breakout level. Right? So I just practiced patience there. I waited a bit, and then I waited for the price to consolidate, to move sideways a bit. And then when it broke above this rectangle, then that's when I bought Thungela shares. So now it's much easier because of the volatility that we saw in the market. The best case scenario is that the body or the closing or the opening price would have been higher than this red candle. Unfortunately, that didn't happen. So now we need to work with what we have in the table. So our stop loss now is currently somewhere around 109 Rand per share. And then we're expecting the share price of Thungela shares to continue to go up. The reason why we use a stop loss is because nothing is guaranteed in the market. The share price, it can still come back and then to trade lower. But when it comes back, best case scenario is that it finds support here and then continue to trade high. So it will depend which scenario happens first, but we always use a stop loss because whenever the market falls, we don't know how low it can fall. And just in case you think that the market cannot fall a bit far than wherever you think that it can find support, remember the stock market does not care about your opinion. Whatever opinion they have, the stock market is just going to go wherever it wants to go. So this is Alibaba Group, the people that have Easy Equities USD account or whichever broker. They were happy when the stock market was going up there. Unfortunately, the share price of Alibaba, it reached the top there. I'm not sure whether that was the time when Jack Ma disappeared. But when it came back, you see there are a lot of dips that people were trying to catch the dips, but the price, it kept on falling there. So you wouldn't want to be in this position from 320 all the way to about 107 Rand. Not 107 Rand, 107 US dollars. So that is why we always encourage people to use a stop loss because nobody knows how low the price is going to fall. Some people, unfortunately, they have lost money trading Naspers. Remember, Naspers is a big company. You always think that the share price is not going to fall. So I made these annotations. There's a video that is coming on YouTube. I think it's going to come on Tuesday morning, where we are talking about some of the lessons that I've learned in the market. One of the mistakes that I made was to continuously to buy the dip. We don't just buy the dip because the dip can keep on dipping, right? But today I just want to share with you trading opportunities where I took positions. I had a position on Sasol for quite a while. Then on Friday, I took this position. I will show you why I took this position. So I made a video to say that I had sold a portion of my Sasol shares to buy more ShopRite shares. So I waited for this breakout. Then I bought Sasol. It was around 310 Rand. That was my entry. And then the share price, it came to trade around about 360. Then the share price started to reverse. I was able to exit around 343 Rand, if I recall well, and then to lock in that tiny profit. Okay, the people that stayed with their trade, they saw the price move from all the way to 260 to coming back to touching about 305 Rand again. Remember, guys, the market can go wherever it wants to go. So your goal as a trade is to ensure that you are with the market when it goes up. Whenever it goes down, you try to avoid that because every time it moves sideways, always remember that there is a company that is going up. So now we saw that the share price, it pulled back to this moving average, which has now become a support level. But since we are looking at the weekly time frame, then I had to wait for this week's market close, to wait for confirmation that the candle it close, it is green, and also it is supported by volume. But for the money in the market is always going to be there. You shouldn't force trade. You should always wait, plan your trades, and then trade your plan. So that's the same thing that I did here because I either wanted Sasol to consolidate here and then break above this level, then I would have taken a position. But then I saw that, okay, it's here, it's back at this moving average support level. We've seen in the past, it's been finding support there. It's not always perfect. That is why we have stop loss that if the share price goes below this 50-day moving average, then we exit that position. But overall, we are still bullish on Sasol. The reason why we are bullish on Sasol, we showed the chart of Brent Crude that it's moving up. As long as Brent Crude is moving up, we expect Sasol to also move up. But also Sasol as a company, I know that I'm speaking from a trader's perspective. I'm just looking at price action. But Sasol as a company, they reported a positive result, even though they didn't declare dividend. So I think one of the things that pushed the price a bit lower was the people that were disappointed by the lack of that dividend. So the trade is going to go on. I think I entered somewhere around 333 Rand per share or 334, and then my stop loss is at 207. And then I'm targeting about 460, which is just this top level there. So the nice thing about technical analysis is that you can trade just the levels. It's not about where you expect the company to go in terms of the business. The business is going to do whatever that they do. But in terms of price action, you can see levels. Like, for example, this resistance level here. Then you can expect that the price, once it reaches that level, it's going to stand a bit. But as long as the upward momentum is there, then we can expect that breakout, maybe a pullback, and then the price, it pushes further up there, and then we reach that target. This is the trade that I took on Friday. It is a swing trade, but in my portfolio, I have a long-term position. Well, when I say long-term, I mean that I'm holding that position until the stop loss is hit. I don't have a company that I plan to hold for the rest of my life. Right? Another company where I was looking forward to trading last week, it's Remgro. I don't know why now my internet is low, but I wanted to buy Remgro when it reached and closed above this resistance level. But due to everything that was happening last week, it didn't happen. So now I just have to wait for that breakout to happen. But I just want to assure you that if and when that breakout happens, then I will take that trade. And then the short-term target is going to be this level here. I think that's about 160. Let's say that the breakout, it happens on the weekly chart. We'll see that the share price goes above this level. And then my stop loss is just going to be somewhere around 125. But that is, some people, they call it take profit one. And then as you can see, there's another supply level here, and then there's this overhead resistance there. So what you can do is that if you buy, if let's say, for example, Remgro break above 140, we can buy here, wait for the share price to go up, break out, then maybe retest, then we add to our position at 160, then we wait for the share price to go back, to go to 180, maybe break out, retest, we add onto our position until we reach this level of 200 to 210. That's another way to maximize returns in the market. I don't believe in that you buy a company, buy and forget. A lot of things can happen while we are still waiting for the company. You see, like I said, that it's important to exit some of your position if and when they start to pull back. You see, we had a position on ArcelorMittal. We bought more ArcelorMittal when it broke above this level. It pushed all the way to about 11 Rand. Then started to run out of steam. It's just that these things, they look clear when you look at them in hindsight, because then you start to even notice the volume, what the volume was happening there. So now from 11 Rand all the way to about 8 Rand 50, it means that we're sitting somewhere around Rand 50 loss there. You see, in the market, there's always going to be something that is going up. So you don't want to be tied in this position that is not going anywhere. The upward momentum is still there, but we're not at a place where we want to buy this particular share. So right now, it's either we wait for the price to come back above this red line, which is the 50-day moving average, then that will give us an indication that the upward trend is still going up, but now we have this overhead resistance there. So if you buy somewhere around 9 Rand, you can expect a bit of resistance there. But if you buy above 11 Rand per share, then you know that there's no overhead supply that is going to stop the share price from advancing. It's the same thing that people saw with Purple Group. Well, I don't have Purple Group in my portfolio. I don't have a problem with the company. As long as the price action looks good, I'm happy to find trading opportunities there, but I don't want to invest in Purple Group just because other people are investing it. As you can see, what you're trading, we're just trading the chart patterns. They are repetitive, and we just exploit that repetition. The share price was nice, moving up there. For some reason, this was the past price. Some people were expecting PPE. to find a bit of resistance there. So as you can see, these 3 candles, I'm not teaching you candlestick patterns, but this is a characteristic of a reversal candle. We see that the market is moving up nicely there. Then we start to see opposing candle. Then now the next thing that we want to see, the best case scenario is that we see the market pushing further up to show that this was just a minor thing that was happening on that week. Unfortunately, in this case, we saw an even larger red candle. And this showed us that now the share price was ready to come back a bit. And then because we had this previous resistance level there, then we expected the share price to either find support on the moving average or to find support around this resistance level. And then for some reason, it pushed all the way to this 200-day exponential moving average before pushing a bit up there. So it made the bounce here. Then the buyers, they pushed the share price up. Unfortunately, it didn't close above this level. If it closed above this level, then we were going to be more confident on this particular setup. But as soon as we see the price above 250 per share, then we can buy with a bit of confidence, getting that 250 per share, and then having somewhere a stop loss there. So that is all that we do in the market. If there's a company that you would like me to cover, just write there in the chat box so that I can quickly cover it and then see, because now we have about 10 minutes before Zoom kick us out. I know that Martin said I can use the same details. So I will try that if there are more questions coming with stocks. Okay, somebody's asking about ETF and Rhodium. If I had this ETF, I think it was around 2020. I made a bit of money, but I gave back all the gains. Okay, this is a nice, beautiful setup. I was planning to buy the stock, but I didn't have cash. But as you can see, it remains bullish there. So I'm just going to close this. But to see the setup as it was at that time, I was just waiting for the share price to close above the 100-day moving average there. Then that is when I entered the position and then see where the price was going to push. In hindsight, if I took the trade, I would be sitting on profit. But right now, as it is the momentum, I expect the momentum to continue to go up. The reason I had my stop loss there, at the time, I was targeting this resistance level there. Remember, when we speak of a resistance level, we are not talking about line. It is why we always refer to it as an area of value, because from the tip of wherever the tallest candle is there, then we can expect the share price to either reach that level or to turn somewhere near that level. That is why it's important that when you set your stop loss, especially if you're using a 10 line, don't set loss, your take profit exactly on the line of the 10 line. Set it just below that level, because a lot of people, they already have take profit there. The price can just go and then start back before you locking in your profit there. But based on the setup, yes, ETF Rhodium is bullish, is currently pushing up. Well, because I'm not that much, I don't do a lot of fundamental analysis. I don't know which companies are actually producing rhodium, but if we are to assume that the platinum group metals, they produce rhodium as one of their byproducts, then I would consider looking at those companies to see what is the setup there in those companies. So if you already have a position on ETF Rhodium, at this moment, I wouldn't worry. I will just have a stop loss somewhere around 2,150. Yeah, I think this is in the 2,000 range. I will have my stop loss there so that if the share price it turns back, I don't lose a lot of money. But if you don't have a position yet, then it's better that wait for consolidation, because at this moment, if you buy at the current share price, your stop loss will need to be around 2,550, which is a lot, considering that if you are targeting this level, then your risk to reward, it then becomes less than 1:2. But another thing that we can expect to see as the share price is moving up, if you can just see a bit of consolidation, right, then the price is setting another support and resistance, and then it break above this level, then that would be another best place to put your position, because you can set your stop loss inside just below that resistance level, or if you are a bit more patient, you're not in a rush, you can set your stop loss just below the support level. But at this moment, it looks bullish. I like it. I missed it. The plan was to buy it, but I missed it. It happens. We do miss a lot. One stock that had me a bit last week was Apple. I had a long position. The share price went up, was nice, holding there. So this is last week price action. In fact, I should have, let's see, Charles app is not good, taking stop loss. Yeah, no, I always look at the charts. Some people, they say that they won't have time to look at the chart at all times. But remember, it's your money. Either you take care of your money or you come up with excuses. It's just unfortunate that we don't have these capabilities on the Easy Equities app. But yeah, so the alternative is to always keep an eye in this in your portfolio or in the chart. Like TradingView, I use TradingView. It's for free, but it comes with a lot of ads. But it does work. Yeah, it does work. So yeah, Apple, I was supposed to exit here when it closed below the 50-day moving average, but I was too lenient. You know, Apple is a big company, blah, blah, blah. They're sitting in the pile of cash. Then we had, unfortunately, we had the stop loss somewhere around 154. Then the share price on Thursday, it came to this level, triggered our stop, and then it pushed back up to 164. So at this moment, I don't have Apple shares in my portfolio. I'm sitting on the side. What I'm waiting for Apple to start trading above 170 again. But even then, I won't be in the rush to buy Apple. I will only waiting to buy Apple once it's trading above $183 there, because then that would be a confirmation that the uptrend is intact. Remember, we showed the chart that Nasdaq is struggling. As long as Nasdaq is struggling, we don't expect all the it's NTQ. We don't expect the tech stocks to quickly find support until Nasdaq is trading above 14,800 points. That is when we're going to be confident about this thing. Okay, we still have 10 minutes. We're not going to upgrade. And it, we are poor. We live in South Africa. So just in this quick 10 minutes, maybe let me show you what I have. Remember, I said that I have an account with eToro. So that's where I trade US stocks, because there I can set stop loss easily without issues. I had a position on Alcoa Corporation. This is an energy stocks. Then based on the previous price action, we were expecting a bit of resistance somewhere around $80 per share. Then, as we can see there, it stalled a bit, but we entered somewhere around $54 or $54. So we have exited this position at this moment. We don't have a position on Alcoa, but the energy sector is still bullish. Then April, I said that this trade triggered our stop, so we don't have a position there. On Friday, we bought this company. Well, I'm not sure if it's called Bungie. I don't really care about the company or what they do. What I care about is the technical setup. As you can see, the share price, it broke above this level. And then for the past 3 weeks, it's been trying to stay above there. And then last week, it broke above this level. So our stop loss is just somewhere around 95, 97 US dollars. We're expecting the share price to continue to go up. So until the stop loss is triggered, we are happy to hold that position. And then we have a position on Thungela Resources. This is another energy stock. At this moment, it's trading at this supply level somewhere around $8.80. What we would like to see with these companies that it breaks above this level. If it does that, then we expect the share price to continue to move further up. So we have a position there. We were at some point we were highly. We had large position in the energy sector, but we have tried to reduce our position there. We have a position on Corteva. Corteva is a chemical company. In South Africa, they also supply seeds. I'm not sure if they supply fertilizer, but this is one of the strong sectors in the US. So we have a position there. For those that haven't noticed yet, we like to buy a breakout. We can buy the dips, the pullbacks to the moving averages, but we also like buying these breakout levels there. Halliburton, we had a position, but the stop was just too tight. It got triggered. The share price, as long as it remains above $33, we're still going to go back there, take our position, and then again expect the share price to continue to move further up. And then Hess Corporation, we bought the breakout at the time when it happened. We are happy to see that the price is now advancing to the direction where we anticipated it to move. Then last week, we also bought General Dynamics. We loved this breakout. As you can see, the amount of volume, it was a lot. But now the problem is that the share price is reaching this previous high of about $228. We would like to see the share price breaking above that level. That will be the best case scenario. Then the worst case scenario, of course, is that the share price would find weakness and then it will trade lower there. But we'll see how they trade. Let the market decide for us. We have a position on Kroger Company. Yeah, we tried to buy this breakout, then it pulled back. This is it's like a supermarket company. This week they will be reporting their results, so hopefully they will have nice results there. As you can see, they have a dividend yield of about 1.81%. In terms of revenue, yeah, their revenue is growing a bit, but their net income is just below, it's somewhere around 1.5 billion, and their profit margin is all over, it's growing. So if they report a positive revenue and are able to generate profit, we expect that they declare a dividend there. Then we bought Coca-Cola the previous week, not this last Friday. So Coca-Cola, it also broke above this level. It had a decent amount of volume. And then this week, it continued to trade above there. So that's when we bought Coca-Cola. It's the first time I bought Coca-Cola into my portfolio. Well, I don't have a problem with the company. I know some people, they buy Coca-Cola because they've been paying dividend since forever. The dividend yield is about 2.8 cents. Well, unlike South Africa, most of the US companies, the dividend yields are below 4%. But if you look at the interest rate in the US, is much lower compared to the interest rates that we have in South Africa. Then I also have this cigarette company. I once made a video where I was talking about cigarette companies. This one is Altria Group. They make quarterly distributions, same like a British American Tobacco. But I got a position here on Altria, so I have a position there. Then another company where we have a position is S&P. S&P, it's a coal company. It's like the Thungela version of the US. So as long as the price manages to trade above $40, we can still make money there. The upside is huge. We are not worried about that. And then this another oil company, Occidental Petroleum Corporation. You see that it pulled back a bit to this breakout level. So we're just waiting for that share price to revert to lower prices. Then we can take that position again. We don't have a position in OXY at this very moment. So you see, in our portfolio, we don't have a lot of companies. I know some people, they love some names because those names, they've worked very well for them in the past, like this company. But if you didn't take profit, then as KC, you see the share price can go up. They're sucking in a lot of investors, especially the investors that do not know how to find opportunities themselves. It's not a problem following what other people are buying. The problem is that you don't know where those people are going to exit. So those people that were sucked in last year or in 2020, most of them have given back the profits there. But one ETF that people love, we don't have that ETF in our portfolio at this moment, this S&P Innovation ETF. We see that now it's back somewhere at this level, which was the previous breakout level. And then now at this moment, it's showing sign that it is rejecting the lower prices. So before we buy this S&P Innovation ETF, what we are going to do is to go to the MDD sheet of S&P Innovation to see which companies it is invested in. We saw that Cathy Wood she's been selling some of the shares, but also buying some companies. Well, we don't have a problem with the fund manager. We just want to make sure that when we buy this ETF, we are buying it because the fund manager is now buying what we can say it's the right companies. But like I said, there's no need to face the market. There are ETFs that are actually on an uptrend. Instead of locking your money, hoping for the best, you could actually be making money. This metals and mining ETF, XME, we couldn't find it on Easy Equities. We also couldn't find it on eToro. But as you can see, the ETF is on an uptrend. So it's much better to buy this ETF rather than trying to pick up at the bottoms. We understand that people, they like to pick at the bottom of the barrel because things look cheap there. We are not interested in cheap things. But on Easy Equities, you can find this ETF, the SPDR, Metals and Mining Producers Fund. The trail code there is PEAK. You can see it's on an uptrend. It's similar to that XLE. So at all times, we just want to make sure that whatever that we are buying, it's on an uptrend. We don't want to place our trades on hope, to say we hope that the market is going to recover. If the market does not recover, we are not making money. I just want to find the other ETF. It's XOP. We have another ETF on our eToro account, is this XOP, which is also nicely on an uptrend. So really, guys, there's no need to take your money and sentence it to death by buying a company that you wish that it can go up. There are companies that are going up. There is no need to wish. In fact, we are looking at some of the American companies that have a market cap of over 2 billion that have reached 52-week highs. As you can see, 41 names, they meet that criteria. Then if you go through each and every company here on the chart, you can see that they are all right. We can see that there are companies that are moving up, right? So guys, for those that don't know, we have ebooks on our Gumroad. You can get some for free, some you can buy. If you buy those ebooks, then you're going to have money to buy a better laptop so that you can have a live event on YouTube. But for today, thanks, Inonke, that managed to come today. I hope that this session was a bit helpful. We're going to try to have more of these sessions. And please bring your questions so that I don't dictate where the conversation is going. So I think we're just going to end it here because, well, Zoom